Friends, today we see the asset accounting, periodic processing. This module covers depreciation definition, depreciation types, depreciation calculation, depreciation keys, depreciation posting. We'll stop at depreciation posting. The rest of the things we'll cover in the part 2. Depreciation definition. Depreciation is the reduction in the value of the asset due to usage, passage of time, wear and tear, technological outdating of obsolescence, depletion, or other such factors. Depreciation is selected so as to change a fair proportion of the depreciable amount in each accounting period during the expected useful life of the asset. Depreciation includes amortization of assets whose useful life is predetermined. Depreciation types. The SAP system identifies the following type of depreciation: ordinary depreciation, special depreciation, and planned depreciation. In the SAP system, depreciation can either be planned automatically on the basis of depreciation keys, or it can be performed manually. Let's explain in brief. Ordinary depreciation. Ordinary depreciation is the planned deduction for wear and tear during normal use of an asset. Special depreciation. Special depreciation represents deduction for wear and tear on an asset from a purely tax-based point of view. This form of depreciation offers percentage depreciation possibly staggered within a period allowed by the tax authority without taking into account the actual wear and tear of the asset. Unplanned depreciation. Unusual influences such as damage which leads to a permanent decrease in value of an asset are covered by an unplanned depreciation. Transfer of reserves or reduction of APC. The transferred reserves component allows all or a part of undisclosed reserves that arise from the sale of assets to be transferred to replacement assets. This type of depreciation has to be posted manually. It cannot be posted automatically using depreciation keys like other depreciation types. Interest. For internal accounting purpose, it is also relevant to evaluate the fixed assets capital tied up in an asset in addition to the depreciation. You can account for the tied up capital by calculating imputed interest. The system treats the calculation of imputed interest as a depreciation type since it is also controlled by depreciation keys and calculation method similarly to the calculation of the depreciation. Transfer of resource or reduction of APC. The transferred resource component allows all or part of the undisclosed resource that arise from the sale of assets to be transferred to replacement assets. The gain from the sale thereby reduces the depreciation base for the newly acquired assets, or you can show them as special reserves on the liability side of the balance sheet. If reserves generated by the way of gain from sale of assets are not transferred in the year in which they arise because they are no appropriate new acquisition, then a reserve can be created. In this way, the gain from the sale of assets doesn't count as profit. This reserve usually must be transferred within the following years to new assets acquired during this time. Interest calculation is controlled by the same way as depreciation calculation using the depreciation key. In addition to the base value for the calculation, for example, acquisition value or replacement value, we can also specify the interest rate using the calculation method of the depreciation key. Interest calculation is carried out either until book value 0 is reached up to end of the expected useful life or for an unlimited period. Depreciation calculation. Depreciation calculation is based on the control parameter mentioned below as well as on the planned useful life of assets that is entered in the asset master record. Depreciation key calculation method cutoff value, that is scrap value. Let's see the picture here how the depreciation processing is running. This is the depreciation program. It is taking all the inputs from assets data and the evaluation parameter, depreciation parameters, interest parameters, depreciation postings in the history, and unplanned depreciation adjustments. Based on that, it will give the output depreciation result report, which leads to the update in the FIAA assets and financial posting. From there, it goes to CV postings. Depreciation keys. The depreciation key contains the value setting which are necessary for determining depreciation amount. Therefore, they are available in all company codes. You can divide the duration of depreciation into several phases in the depreciation key. If you enter a changeover method for one of these phases, the system changes over to the next phases as soon as the event specified in the changeover method occurs. Then the system uses the type of depreciation calculation that is specified for that next phase. Represents the combination of calculation rules which are used for calculating depreciation. Depreciation keys are defined at the level of chart of depreciation. Depreciation keys. Specification parameters that the system requires to calculate depreciation amounts are entered in calculation methods. Below mentioned calculation methods are assigned depreciation keys: base method, declining balance method, maximum amount method, multi-level method, rate control method. Depreciation keys calculation method. The system uses calculation method For the calculation of depreciation, you assign calculation methods to depreciation keys. The calculation methods provide the parameters for the depreciation calculation program. The calculation of depreciation is controlled by calculation method. The control parameters that are entered in depreciation keys and the cutoff value keys. You maintain each calculation method separately and then assign it to a depreciation key. The individual calculation methods are independent of each other. You can use given calculation method in more than one depreciation key. Depreciation keys base method. The base method contains general control parameters the system needs for calculating depreciation. The base method is independent of the chart of depreciation, meaning that it doesn't contain any country-specific settings. We specify the depreciation type and valuation type allowed for each depreciation area in FAA customizing. The system then issues an error message and rejects posting when you try to use the type of depreciation that is not explicitly allowed. Depreciation keys declining balance method. The normal declining balance method depreciation multiplies the straight line percentage rate resulting from the useful life by a given factor. Since a relatively short useful life can produce very large depreciation percentage, you can specify maximum percentage as the upper ceiling limit in the declining factor method. A similar principle applies to very long useful life. Entering a minimum percentage prevents the percentage rate from sinking below a given level. Maximum amount method. We use the maximum amount method to specify the maximum amount up to which the system should calculate depreciation until certain calendar date. In this way, we can meet those legal requirements. For example, that allow depreciation for certain assets only up to a set amount. During the specific time period, the system calculates depreciation only until this amount is reached. We also specify there whether the maximum amount applies to annual depreciation or accumulated depreciation. If you need maximum amount method, define them in customizing. Choose depreciation valuation method, depreciation keys, calculation methods. Screenshots given here. Multi-level method. Base methods for certain depreciation calculation method, stated percentage and total percentage in concessionary period. Use either a total percentage rate or a periodic percentage rate to calculate depreciation. You can divide these calculation keys into as many levels as you like. A level in this sense represents the period of validity of a certain percentage rate. This percentage rate is then replaced by the next percentage rate when its period of validity has expired. In addition, you can limit the levels according to specific acquisition years. This enables you, for example, to observe certain legal requirements that place time restrictions. Period control method. For determining the depreciation start and end date of asset transaction, you can set an appropriate period control in the period control method for the four transaction categories: acquisition, subsequent acquisition, post-acquisition, intra-company transfers, retirements. This enables you to set the depreciation start date for all acquisitions within the same year to the beginning of the year. For example, you can also set the depreciation start date for retirement to the first or last day of each period using the asset value date of the transaction. Acquisition or retirement. The system determines the start date or end date of depreciation calculation using the period control. Period control, how it works. For the IFRS view, assets are recognized when the first cost for the assets are posted. The date of capitalization is determined according to the mid-month approach, meaning that if the asset is acquired in the first 15 days of the month, the capitalization date is the first day of the month. If it is acquired in the last 15 days, as from the 16th day of the month, the capitalization date is the first day of the next month. The start of depreciation follows the mid-month approach, meaning that if the asset is acquired in the first 15 days of the month, it will receive full amount depreciation. If it occurred in the last 15 days, it receives a depreciation. This is no depreciation. The first moment the asset is depreciated as the next month. So assume asset is, they give some example. If the asset is purchased 8 May, which is before 15 days, so from for the full month depreciation for the month of May. If the asset is acquired after 15th of May, that is 21st, so there is no depreciation for the May month. It starts from the June. Here we use some screenshots for depreciation keys. In depreciation key, we are given calculation methods are assigned, calculation method, and also we have the changeover method, specifies when the changeover to take place, different phase of the depreciation key takes place. And again, the depreciation key, we have like ordinary, immediate depreciation, periodic control, multi-level, changeover, everything is given here. And evaluation for book depreciation. Month-end closing depreciation example, book depreciation valuation, straight depreciation from acquisition value to zero without interest. Depreciation is on with depreciation. Month of purchase, depreciation key, useful life, annual depreciation start. These are the required things for depreciation. Then value will be calculated. Depreciation posting program. Depreciation posting program RAPOST 2000, that is AFAB, can perform following postings: annual depreciation, which is depreciation on cost accounting, tax depreciation or allocation, and write-off of reserves due to special tax depreciation, unplanned depreciation or other manually planned depreciation, imputed interest, evaluation of APC or of accumulated depreciation. The program RA Post 2000 directly post to the GL account and additional account assignment objects. Using a test run, you can run for any possible errors. Any errors that occur are displayed in the error list. Depreciation posting AFAB depreciate decode. We have the option of planned posting and repeat, restart, unplanned posting and we can do it in the test run first. Determine the next period to be posted according to the different depreciation posting frequently. So test run is a log test status and period to be posted. Real run once test run, we can name it real. That can be background or foreground. Schedule immediately to feature date and job status. You can see the one job. When you can spool from the spool, you can see two spools created. Then you can go and see it has been output SP01 spool display. Here we can see under depreciation and unplanned depreciation posted. Asset disposal. Depreciation posted can also be seen in the asset disposal, which is AW01 again. And we can see annual depreciation and unplanned depreciation. Unplanned depreciation. System automatically determines unplanned depreciation for the current fiscal year by means of depreciation keys entered in the master record. If you need to specifically set the amount of depreciation, the system offers a manual depreciation forecasting option. You can manually increase the planned values, manually for the asset. You can generate manual depreciation amount.